Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm Professor Code and this is the Forex Super Model weekly review for Monday the 10th of the 5th to Friday the 14th of the 10th 2021. We've written up the weekly flows for you to get us underway. We're going to start this as we write up the dailies. Anyway, here we go then. So the weekly flows for the 10th to the 14th. Euro dollar minus 18, so that means over that period the euro dollar as an FX pair lost 18 points or pips. Euro yen plus 73, euro pound minus 73, pound dollar plus 94, pound yen plus 202, and dollar yen plus 72. If you input that into the flow model, you get a positive unopposed driver in the pound at plus 369, no backdoor flows. The opposing negative flows mainly coming out of the yen at minus 347, out of the euro at minus 18, and the dollar is the negative rock at minus 4, activity plus or minus 369. Right, so if basically over the week we had pound strength, which was unopposed, and the yen was basically soaking up these opposing negative flows, to the exception of all else. The euro hardly moved, and the dollar hardly moved as well. So that's what was happening. It may not have felt like that while you were trading it, but that's what was happening during the week in the majors. So don't go away, we'll write up the dailies. Right, welcome back. We've written up the daily flows then. So Monday the 10th, first day of the week, we've got a positive unopposed driver in the pound at plus 359. No backdoor flows. The opposing negative flows coming out the yen at minus 159, out the euro at plus minus 139. And the dollar was the negative rock at minus 61, activity plus or minus 359. Tuesday then, we had a negative unopposed driver in the dollar at minus 65, no backdoor flows. The opposing positive flows mainly going into the pound at plus 27, the yen at plus 20, and the euro was the positive rock at plus 18, activity plus or minus 65. Wednesday then, we had a positive unopposed driver in the dollar at plus 270, no backdoor flows. The opposing negative flows mainly coming out of the yen minus 200, the pound minus 37, and the euro minus 33 was the negative rock, activity plus or minus 270. Thursday we had a positive opposed driver in the yen at plus 59, front and backdoor flows mainly coming out the pound at minus 41, out the dollar at minus 25, and the euro was a positive rock at plus 7, activity plus or minus 66. Finally, Friday then, we had a positive opposed driver in the euro at plus 138, front and backdoor flows mainly coming out the dollar, minus 125, the yen at minus 70, and the pound was the positive rock at plus 57, activity plus or minus 195. So if you look at the activities, Monday was reasonably strong, Tuesday was pretty static, strong again Wednesday, static Thursday, and reasonable Friday. And you've also got unopposed positive and negative drivers all over the place. So the market was basically swinging around via the data noise. Right, so we're going to stop that there and do the analysis, so don't go away. Right, hello again. We've written up the asset classes. Just to remind you then what's been happening over the week in terms of the weekly flows. We've had the pound as the unopposed positive driver, so the pound's been strong, driving the market at plus 369, no backdoor flows, and the bulk of those positive flows have been coming out of the yen at minus 347. The euro is minus 18 and the dollar is minus 4, so they've hardly moved during the week. Obviously they've had volatility, but they've ended up roughly where they started. And the action's been in pound positivity and yen weakness. Right, so let's have a look at the individual asset classes. Then the US dollar index sold off yesterday again. It's now operating at 0.27 from the floor. Gold has come off the back of this weaker dollar, arguably, and that's 0.4 from the high. Oil is not really getting going, but it's staying fairly strong at 0.25 from the high. Wall Street had that equity sell-off this week off the back of those CPI data in America, the strong CPI, and we're looking at 0.2 from the high. It's recovered from there, and the S&P is similar. It's 0.14 from the high. The tech has recovered a little bit. It's 0.33 from the high, but it's underperforming relatively speaking. The US 10-year, the price has bounced, which means yields have come off again, and the bund is operating below the previous support, and it's 0.125, basically an eighth off the floor. So relatively speaking, European yields are outgunning US yields, and obviously that has an effect on the euro dollar. Gives the euro dollar potentially a boost to the upside. Copper, we had these 5 pumps. It came back down to base camp. It messed about. It's now operating at sort of about 0. What have I done? I've rubbed that off. So was it? Copper is 0.28. 0.28 from the high. So copper's had a bit of a wobbly time at the top, but it's coming back. US steel then sold off at the double top. Again, this has been messing about. It's now 0.3 from the high. A little bit soft, but getting there potentially. Right, so we'll stop it there and do the final analysis. Right, welcome back. Basically, what's going to knock these trades around next week? So we're looking ahead at the economic calendar. Monday the 17th, we've got China retail sales, JPY GDP. Tuesday we've got the Reserve Bank of Australia minutes, GBP claimant count and unemployment rate, and we've got the Euro GDP and the ECB Lagarde speech. Wednesday we've got GBP CPI, Bank of Canada CPI and the FOMC minutes late on for us in the UK, early evening. Right, our trades have come back. We're still we're about 1,340 points in profit. So we're what are we? We're short USD dollar against the euro, the pound, and the AED, and we're short the NZD against the euro, the pound, the CAD, and the AED. Right, it's the NZDN that's causing the problems. We've got a big tick on the dollar really in terms of selling the dollar. The NZD still, the market is still, in our opinion, in denial on the NZD and using the NZD as the go-to commodity currency. But that will change. Right, so what have we had this week? We had strong US CPI, which sent the market into a bit of a tailspin. So you've got this concept of is the Fed suggesting that inflation is transitory, and yet the market is showing increased signs of solid inflation. And then Friday we've had these relatively soft retail sales, which have been despite stimulus checks, which again was a little bit disappointing for the US economy. We had negative Michigan consumer sentiment, but we had an inflation expectation rise as well. So it sort of plays into this whole sort of narrative that the economy is generating, the US economy is generating inflationary expectations. The Fed has said they're going to run the economy hot. The market has seemed to forget all these communications, and is sort of as soon as they get a whiff of inflation, they want the Fed to act. But as we know, the Fed is in a position where it cannot act on inflation. It's printing like there's no tomorrow. The only way they can sustain their fiscal position and monetary position is by deflating the dollar, basically, and purchasing power. So, and the way you do that is by you pump up asset prices, financial asset prices like equities, commodities. You're seeing that. Oil's slightly lagging, but we think oil is going to start to really go some soon, and at some stage we're looking to go long. So you've got this sort of push me, pull me. The Fed basically is trying to make noises that they're being responsible about worrying about inflation, but really inflation is what they've engineered through their policies. They want it. They want the dollar to be degraded. They can put up monetary wages, raise minimum wages, which on the face of it looks good, but the purchasing power of those wages is diminished. So that's where we are. What's going to happen next week is going to be another. It's going to be another carrying on of the theme of will the market decide whether inflation is kicking in and the Fed is going to act or not. When you're short the NZD, you basically at the moment you're gaining if there's risk off, despite the fact that you're long the AUD and the CAD, which normally would come off with it, but of course this is against the NZD. So we're in a slightly peculiar trading position, but this is the way the models work, because this is where the elbow room is on the FX pairs. So we're going to put out the data cycle review later, the sister video, so try and catch that. If not, see you Monday for the daily briefing. Thank you very much.